Hey everyone, welcome back to another accounting deep dive. Today I'm going to break down IAS 41 agriculture. Yep, we're tackling the ins and outs of accounting for agricultural activity. Let's get started. First things first. IAS 41 is all about how to account for biological assets and agricultural produce. Now, you might be wondering, what's a biological asset? Think of livestock, crops, or even vineyards. These are living plants or animals that are used in agricultural activity. The key point with IAS 41 is the requirement to measure these biological assets at their fair value, less cost to sell. So, fair value, what does that mean? It's basically the price that you'd get in an arm's length transaction. Imagine selling your crops at the local market. That's the fair value. But here's the catch, you also need to deduct costs to sell. These are the costs that are directly related to selling the asset, like transportation or commissions. So if you're selling apples, think about the cost of getting them from the farm to the market. Now let's talk about the recognition and measurement aspect. Biological assets should be recognized when you have control over them. There's a probable flow of future economic benefits, and the fair value can be reliably measured. Simple, right? Once recognized, you need to measure these assets at fair value, less cost to sell on initial recognition and at each subsequent reporting date. This means you're constantly updating the value based on current market conditions. But don't worry, if you can't measure the fair value reliably, you can use the cost model until fair value can be measured reliably. This means you'll use the cost of the asset, less any accumulated depreciation and impairment losses. Now moving on to agricultural produce. Once harvested, these products are measured at fair value, less costs to sell at the point of harvest. After that, IAS 2 inventories kicks in. So, those apples we talked about earlier, once picked, they're valued at fair value minus costs to sell. One more thing to remember is the disclosure requirements. You need to provide information about the nature of your biological assets, the measurement basis used, and any changes in fair value. This ensures transparency in financial statements. So, to recap, IAS 41 focuses on fair value measurement of biological assets and agricultural produce, requires regular updates based on market conditions, and ensures transparency through detailed disclosures. And that's a wrap on IAS 41 agriculture. I hope this breakdown makes it a bit clearer for your studies. Keep those questions coming in the comments, and don't forget to like and subscribe for more accounting tips and explanations. See you next time.